All right, we'll just get started here. So today was Monday, the 10th of March. So no news today. Tomorrow we have 10 a.m. news. We also have CPI approaching on Wednesday. And I'll kind of go into the probabilities and what I was expecting going into today and the execution as well. Babek asked, "Do you trade live for the membership?" Yep, I do. There's live streams, there's trades, there's daily bias, a bunch of different stuff. I'll cover that later in the stream. But looking at the daily chart, actually, let's go to the weekly chart. So obviously for the past couple of weeks, we've been selling off, right? So since February 18th or so, we've been just aggressively selling off and dumping. Really, I mean, it's quite actually a large percentage. It will be a 13% drop early into the year. Whether you want to blame it on Trump or whether you want to do whatever, it doesn't really matter. Price action is price action, so you should have really no attachment to what it's doing, like on a higher time frame or a economic perspective. But on the weekly chart, obviously we got a closure here last week below the previous weekly low, and we also had this sell side below here and this gap that we traded into. So I really couldn't argue one side over the other going into the week. Like yesterday, I did a weekly review with two of my buddies, just kind of looking into it, and I was more bullish going into the week just as a rebalance, potentially, but kind of flat on the day. So whenever I'm going into a Monday, there's a couple different things that I'm looking for to be able to trade on Monday, and I've listed those things in the PDF, so I'm not going to cover every single one just to be fair to them. But one of the major things for me, is the proximity of the previous weekly high or low. So if the proximity of the previous week high or low is close to Monday's open, and we don't have any crazy news on Monday that's likely, or on Tuesday that's likely to mess it up. One of the major things is, can I scalp it on Monday towards that previous week high or low if there's a reasonable draw in that direction, right? So going to the daily, what's going to mark out some of these PD arrays as well. The daily chart, kind of same thing. We ran out the sell side from this swing low on Friday, and we traded back into the range as a TGIF sort of setup. And then we had the sell side over here on the daily, right in here. And I've also marked out the imbalance of this daily inefficiency of where price action is not traded into. So notice inside this larger bisi, this range, sorry if I'm kind of loud, this range right in here has not been traded to at all, right? So you can deem that as inefficient in its delivery. We also have this large bisi below us that I was using as a draw on liquidity going into today. But keep those in mind, and we'll reference them later in the day. But if you look at the hourly chart, and this is kind of my bread and butter for when I'm looking for biases and things like that, the hourly chart to me is perfect. So when I mark up midnight opening price here, you can see I was bullish going into the week. I wanted to see kind of a rebalance or a sweep of these highs. I think it's possible we could still get up there with CPI given this week. But going into New York here, obviously new week opening gap dropping lower. We're trading into it, tagging that new week opening gap, and also the sibi here, right? So it's the liquidity void, and also the gap trades into it. It drops down. We take out that swing low, and going into 9 o'clock, there was no evidence at all that price action is bullish. So there was no bisis, there was no rate on liquidity, SMT at the lows, etc. To me, it just looks like it was still going to sell off heavily going into Monday. And with the proximity of the previous week low being very close to that Monday open. So I can use that as a draw. I can use the daily imbalance as a draw. And both those will play into kind of what I'm looking for. We're finally getting some good price action. And that's why I kind of wanted to review today, because it was, in my eyes, actually pretty clean and very easy to read. And obviously you don't have to capture the huge move. So obviously today, from midnight opening price to, my mouse just unplugged, from midnight opening price to the close, it's an 800 point drop, 3%. You don't need to get all of that. Just got to get your chunk, and whatever happens after that. So you don't deal with, kind of a psychology tip here, you don't deal with the what ifs, you deal with the what is. So should, could, would, all of those, if you're trying to argue, you look at the charts later, I should have held, or I should have done this, or I could have done this, whatever, it doesn't matter. Always must deal with the what is, and that's your execution, and that's what you actually decide to do on that day, whether it may be good or bad, and you have to deal with that. But bias going into the day, I was looking for that daily imbalance to be traded into, kind of as a close proximity as well to that previous weekly low and it being completely left unfilled. As we go into the 15-minute chart, London here I didn't see any kind of manipulation above midnight opening price, but this is why bias is more important than profiling. People are very quick to profile the market based on what it looks visually, and if that's what you're doing it wrong. Profile is a template, it's a framework that fits on some models. So bias is always going to be king. So if I'm looking at the market going lower and it shows me something like this, I'm not going to expect New York to open up and trade all the way above that high and drop down. Expect it to just expand and finish out the move that's been doing the entire time. So sometimes you're going to get the very clean profile where it goes open, high, low, close. Sometimes you get the clean profile where New York creates that high of the week or high of the day and the low closes formed after that. Other times you're going to see something like this where it's very, very weak. And instead you just have it opens and it kind of just drifts lower going into a new time of day. So looking at that, we opened up basically inside of this bisi, and also we had a swing high here on the 15-minute chart, and we right at the 9:30 open, we ran above that swing high, traded into an imbalance on ES, and NASDAQ failed to, right on that first 15-minute candle. So to me, that's a very precise algorithmic signatures that I like to see at a key time. And that's exactly what I'm trying to look for when I'm framing a bias short, as I want to see some sort of manipulation with SMT happening right at that 9:30 open. When I see that and I see other confluences lining up, then I can be confident in taking the trade. But as we look down into I go to the 5-minute actually here. On the 5-minute opens up, it drops down a little bit. We've got an inefficiency there, also a swing high and a gap. So as we trade into that swing high with the gap, there's also an original consolidation below that. That would be your total soup opportunity at 940. You don't need to get that. There's obviously opportunities after the fact, but it trades into there, respecting the bearish order block as well, and obviously just respecting the overall order flow of this market maker sell model here. So that would be a nice entry. And then obviously as we drop at 945, you can look at the 1-minute now. And this is where a lot of the precision happens in here, but we have obviously the SMT. You can see the precision on this decline of basically what happened in here. But I want you to notice trades up here and then it drops down. You've got a short-term low there. It trades through with displacement. You also have a premium imbalance. It tags right at, what time is this? 9:51. So macro time entry within a very precise 2022 model, and then a re-entry here during the macro time as well into a bearish order block with the sibi there. That's what I used to go short right in there. Very standard, I think. It's not crazy complicated to understand. And then I'm targeting this daily imbalance down here. A couple other things I can be targeting. We'll get into that as well, but I want you to notice that unfilled portion that I mentioned on the daily chart over here. This unfilled, so there's a gap here, and this part is completely left unfilled. So that's like completely inefficient is what I'm looking at. You go to the 1-minute. Now, some people, as we trade into that gap, are going to be tempted to take a partial there, and that's perfectly fine. I think that's reasonable to take a partial as we dig into that imbalance. But what you want to be looking for, if price is expected to move lower, or you want price to dig lower into a new key time and key level, what do I need to see? Preferably, we want to see these sibis being respected, of course, and this bearish order block being respected, but also the precision in here of this upper portion being touched and held perfectly as we trade back up. This is exactly what I want to see. This algorithmic precision at an almost seemingly random level in here. And then what do we get? It drops down. You have a gap with the volume bounce there, respects it, candle buy is staying within, and then it drops again. So that's kind of exactly what I want to see regarding the algorithmic precision of, are we likely to keep trading through a gap? If you see this respect, especially on the upper portion or these quadrants of a large time frame gap, that's when you can see it really just kind of expand and work deep into that gap. Like you could just look at this framework here. Almost a perfect respect of low of the day forming at the low end of that bisi at a key time within this higher time frame array. That's very, very precise. And you can put if I can put the midline on this. you'll see in here how many times it reuses this, right? Bounces off, and you can see as we're trading and respecting that lower, or the consequent encroachment, you could be using that as a trade in here, right? During the silver bullet in the PM session, or even in here during the macro time as you sell off into the daily low. But I'll pull up my executions, and the guys in the private group, you can pull up that if you want the bigger picture. You can go to the stream trades and look at that last one that I posted. But if you look at here, we've got here the executions. So shorting it up here as we dig into that imbalance, and then taking a partial off here. Just kind of as we dug into, I think there's a sell side. It was the daily sell side from yesterday, right down here. So the previous week low, I'm obviously going to take one off there. That's a pretty reasonable level for me. A couple more off inside this daily imbalance as we also trade past 10 a.m. Shorting it again in there, buying it back within the imbalance as we trade into that. Right at 10:30, random time, forming the new low of the day at 10:30 there. And then as we drop again, taking one off there. As we drop again, taking the last one off there. And this was very, very close to that AM session low. Eventually we ran out going into the PM session. But from entry to exit, total, if you care about the points, was somewhere around 300 or so. We'll say 300 even. But this last partial here is, if you've been in the private group or if you've seen some of this from ICT before, your opening range, you can project it. So anytime I have an opening range that price is likely to displace from, I'm always getting the -1 standard deviation. It's always the -1. I know some people are kind of questioning that. I did a full lecture on it for the private group. I'll probably do one for public as well. But anytime I'm trying to use the intraday opening ranged projection, it's always going to be -1. I'm seeing where that lines up. Just because it's -1, you can't just use that as a target. I know people are going to use fib projections and kind of just pick the ones that they like. It's got to be lining up with some sort of key level. And here it's lining up with a quadrant of the daily imbalance, and also just the daily balance in its encompassing range in here, right? So that's why I'm taking one off right at 19,558.5. There's my exit there at 19,558.25. So a tick below the opening range -1 standard deviation is where I'm going to get out there. And it was a couple minutes off from that AM session low. And obviously we do trade again another, like 200, 300 points in the PM session. Not a big deal. And obviously you can see the precision in here of it being just kind of almost very, very algorithmic. And this is finally what we're getting after a couple of months of waiting. Exactly what I want to see. And even on a 15-second chart, I've got annotations marked up here from a 15-second chart of the precision that we saw in here. Like we've got imbalances being reused, bearish order blocks being tagged, selling off market structure shifts in here, and inefficiency with a breaker and a sibi. That's a unicorn setup in here. Bunch of different opportunities today. And obviously the 1050 macro being that retracement back into the range. But there's so much opportunity and so much precision on this kind of day. I think it's hard to kind of avoid. So I really wanted to do a stream. And obviously this is a day that I highly suggest going back in and studying. Like, you don't have to understand all of it, but even to just go back in and screenshot from a higher time frame to a lower time frame, and even maybe only mark out 3 gaps per time frame, whatever works for you, to be able to see and study these high probability days and trust that the elements of time and price will repeat. It helps you kind of relax. So going into a day like today, you know exactly what time those entries are going to happen. You know what kind of entry model you're going to use at that key time. You know exactly what time you're going to exit at. You know exactly what sort of draw on liquidity you're going to exit at. All of that subjectivity goes away through study. If you want, that certainty you're looking for, everyone wants certainty in trading. There are no certainties other than your own experience and something that you really can trust. No one can tell you, this is this and this for 100% works, and you're not going to really trust them unless you go back in and actually study it. So for you to develop a model and hold and trust your own model, you have to do the diligent work of going back in and studying diligently, right? And studying diligently, once you get to a certain point, is going to be watching videos and actually improving on your ability to actually understand price. Once you kind of progress past that level, a lot of the actual learning you're going to be doing is going to be about yourself, first of all. So using psychology, obviously. And the second of all would be about your own model. So whatever model you derive from that kind of watching videos and studying, you got to have data that backs it of when you're going to be using it, when you're not going to be using it. So a day like today, it's a Monday with no news. The best kind of action, I guess, on this day would be completely skip it if you're new, if you don't know what you're looking for. As you become seasoned and you understand your model of where it's going to form and how it's going to form, you can trade these kind of days and know that they're going to run. And if you lose on these days, it's still a good execution. We're obviously always trying to hunt for that good execution, and there's nothing that's going to beat that. But the way you refine down when you want to be taking executions and when good losses are going to be good losses and when winning is actually going to be expected within a certain amount of values, you have to have data. So collecting data, going back in and actually screenshotting daily, 1 hour, 15, 5, 1, every day for a month. If you haven't done that at least once, you're extremely, extremely missing out. Because I promise you, if you do it for a month straight, even on low probability days, you will improve drastically in your tape reading ability and also your trust in the market. That's a big thing, I think, is just having that trust that these things are going to repeat. You don't have to chase price. The elements of precision that you're looking for in fair value gaps in the model is going to be there every single day. It may not be at the time you're looking at, but it's going to be there every single day. And knowing, okay, when you get to a certain skill level, you will be able to go in every single day and take something out if you wanted to, or take a high quality trade for a specific model that you may have. But the first thing you have to do is actually master one singular one. So if you have not done that yet, I highly, highly suggest you do that. Is really just dive deep into your model of when it works, when it doesn't work, all the different subjectivities you want to iron out. If you're able to get those wrinkles out, you can operate smoothly without any overthinking. That's the major thing. The less decisions you can make in this, the better you will perform. When everything's automatic and it flows, it gives your brain more resources to actually use about, okay, how do I manage my mental capital? How do I actually fight against psychology instead of fighting against price action? Right? Price action is very simple once you understand the repeating mechanics of it, especially when it relates to time and different PD arrays. But yeah, so you JKX there, screenshotted almost every single day of price action for about a month. And I'm sure if it's diligent work, he can probably vouch that it's something that's you will not find that kind of experience anywhere else. I don't think. It only takes about 30 minutes per day, but I promise you, if you do it, some people want it, some people don't. So this is something that you're gonna kind of see, okay, this is something that I really want to do. And it, like I said, it may only take an extra 20 to 30 minutes out of your day. And I when I do it, I simply will I don't really screenshot it anymore because for the most part, I can kind of remember days, especially like when I do market reviews like this. This is kind of my way of doing one of these. Is just kind of going back in from a higher time frame to a lower time frame, and me explaining it to you is helping me understand and recognize different things that I may have missed in the morning session. But for me, when I'm not even streaming it, I may do it just by myself or with some guys I'm personally mentoring, and I'll just put some music on in the back or be doing something else, and it's relaxing for me. So it's kind of 20 minutes. You can just put music on. You just go back in, you screenshot stuff. And I've also separated it from my journaling time. So my journaling of actually kind of reviewing my own psychology during the day, that has its own dedicated time because I really think that you need to be allocating time and resources to that to really push that kind of edge that you have against your mentality. So highly consider it for anyone who's trying to learn and get really, really good at it. Vouch is part of my routine now and it keeps me sharp. Yep. I love it. Are you screenshotting a certain time period or the entire day? So I would suggest for anyone who's new, you can kind of remove anything past noon, I would say. But I would say the best, realistically, when you're taking screenshots, you should try and capture as much as you can. But I would suggest, in terms of a time frame perspective, more time frames the better, but time permitting, however much, you know, if you want to spend 20 minutes or 45 minutes, you could do obviously every single time frame there is. But I think to get a good understanding of price action, what I would suggest is the daily. I'll type this up in the chat if you want to get it. H1, M15, M5 at an absolute minimum. I think will keep everyone very, very sharp. You can throw in the M1 if you want, but that's really depending on if you tape read that time frame. It's the time frame that I learned on, so I'm very comfortable with it. But if it's too quick, or if there's too much data, or if it just doesn't make sense, you got to just remove it, I would say. So it's up to you, obviously, what you mark out. It's not important you mark out every single PD array, but if you just mark out simple stuff, I keep it kind of very... I've got maybe a checklist of what I like to mark out. I always mark out the first presentation gap. I always mark out an entry during the macro time. I always may mark out, you know, SMT, etc. So that way, what you're trying to do is you're trying to program your brain into seeing it before it happens. Because if you do this for 30 days, you'll be able to understand what it looks like. So when it's actually printing in front of you, you know, okay, this is what it's likely to do for the rest of the day, or this is why I shouldn't be trading because this looks like it's going to be low probability or a low probability condition that I'm likely to lose in. Yeah, Maddie's just sent a picture there of what he's marked up, which is super, super high quality. He's got notes on there, whatever you use. And then obviously if you can store it in something like a Notion, it's perfect, because then you can go in on Friday or Saturday and go back in and really review what you're missing or what you're not missing, and refine down your skill. It's not going to be something you obviously have to do probably every day in the future, but I think as you're growing and trying to trust concepts and trust your own ability, because a lot of the trading psychology part of it is self-sabotage. And I'm sure a lot of people can relate to that. It's just all self-sabotage. So being able to have faith and a degree of certainty in execution helps remove some of that, you know, that self-sabotage of over trading or FOMO, etc. Can you please write out your checklist? Oh yeah, the checklist for backtesting screenshots. I got you. Or I'll send a couple examples. I'll send here, or remind. I'll put a checklist out, because I'm trying to also create a checklist for a full checklist, kind of a what I'm looking for low probability and high probability. So I'll send that out to the private group. And then I do have a video on journaling. It should be either in the notes and PDFs chat. I'm pretty sure I just tagged someone. Yeah, if you look in the very last post into the notes and PDF section, if you click on that, as well as how to set up your OBS Notion. Actually, I can forward this to the Prophecy public stage. So if you forward this, yep, you can click on that, and that'll be how to set up your Notion if you're struggling with that. But I'll put out a checklist kind of what I like to utilize and what I like to mark out. And then for the private group, I also will produce probably this week a document on high probability versus low probability and kind of what I'm looking for. It won't be all encompassing, to be honest, because there's probably a bunch of stuff that I'm going to forget, and kind of what I think subconsciously that I won't be able to put on paper, but kind of a checklist of economic calendar, higher time frame, lower time frame, sort of visual stuff that anybody can really recognize and be like, okay, I don't need this day, or okay, this is a day that I do want to trade. Make sense? So it actually should be a pretty good week. We've got CPI, we've got Thursday news, we've got tomorrow news. So realistically, in a perfect world scenario, you could find trades every single day of this week, and it actually look like this. You know, high probability, precise elements of delivery that are repeatable. Yeah, even tomorrow. Potentially, since we have 10 a.m. news, I probably wouldn't push it. I'm not going to be trading tomorrow because of the pre-CPI. I just have a rule of not trading pre-CPI. But yeah, potentially even tomorrow. Stream tomorrow will be also based on PA, but streams expect Wednesday, Thursday, and then on Friday, potentially based on the PA. There's your new week opening gap, or sorry, new day opening gap. Found a bias for today. It's earlier in the recording, so when I post a recording, You'll see the full analysis if you want, but on the hourly chart, basically just coming into it, to me, there was absolutely no argumentation for longs going into 9 a.m. We had, just looking at the hourly chart briefly, inefficiency with the new week opening gap, trades into it, shifts lower. We can't even get into the imbalance up here, so I look at that as a breakaway gap, and then going into 9 a.m., even on the 15-minute chart. Bearish order flow all the way. There's absolutely nothing I can argue for longs. And if it was going to be long off of this deep imbalance, that would have been high resistance liquidity run anyways, kind of conditions. And notice, we do have all of this building and on this and the relative equal highs that we left over here. So, especially if this is the weekly manipulation, I think we are very much due for a correction back into the range. It's 13% sell off is, despite whether you're retail or ICT, still a great deal. And we left a lot of buy side liquidity above here. So even if we were to come up to like this is the relative equal highs prior to, from previous week, especially if we can react or get some reaction out of this bisi. Now I've got these inefficiencies to deal with, which, CPI could very well pump literally 1,000 points. So do not be trading during CPI, obviously. I hope you know. And obviously, depending on Wednesday's move, if it does shoot up 1,000 points, the price action after could be very choppy. You'll have to see. Flux, do you consider equilibrium of rejection wicks or nah? Not really. To me, it's such a deep discount or deep premium array where I don't really use rejection blocks for the most part. I will use wicks and kind of consider wicks, but only in very certain scenarios. So I guess I will consider equilibrium based on the closure of 50%, but I think the actual usefulness and the times that it pops up is very uncommon. So for most people, it's something I would just say drop. Like rejection blocks really, for 90% of people, is not something you should be studying. I personally think. But then, as you get better at tape reading, wicks are something you do very much want to consider when looking at trending days. Obviously, if we're trading into a wick and holding a certain element of a wick, that's very, very important to me, especially if that wick fills a gap or if that wick sweeps liquidity, one of those two, and I'm seeing a wick kind of being respected, like even in here, kind of see that's filling a gap on a 15-second chart, so that's inefficient. So if we're respecting that inefficiency right there, very, very, element of precision. Yeah, I would say if you don't use it now, you don't worry too much about it. It's just not something like rejection blocks. Absolutely not. For 90% of people, it's just it's hard to spot. How often do you consider YMSMT? Maybe 1 to 2 times out of 10. It's on most high probability days, you're going to be using ES and NASDAQ. On low probability days, or maybe on news, sometimes you'll see YM being utilized. What about mitigation blocks? I do use mitigation blocks. Yep. Mitigation and breakers I'll utilize. I don't really use propulsion blocks or rejection blocks all that often. To me, because I simply just don't understand when they are like propulsion blocks. I simply just do not understand when a propulsion block is a propulsion block. It just doesn't. I gotta rewatch videos. There's just not a lot of content on them. Same thing with rejection blocks, where I'm extremely confident, one, using it, two, even teaching it. Like I could teach on wicks. I definitely could not teach on rejection blocks or propulsion blocks. I don't think I have enough information on those. Same thing with like new day opening gaps and new week opening gaps. Like, there's going to be PD array strength and minus that you will find. Some of them you resonate with, some of them you don't, and that's fine. Propulsion block is an order block that forms after trading into an... Yes, correct. That's the literal definition, though the actual application and I think spotting of them, there's got to be more rules than that. Just like how there's a fair value gap, a gap is a gap, but you got to include a bunch of different stuff. And there's layers to it. So I don't think he's put out enough public content on that topic for it to be utilized in such a kind of demanding fashion, such as fair value gaps or standard order blocks. But I mean, if this is what I normally deem as spring PA. I don't know. I just absolutely love the delivery here this morning. Very, very clean. I wish I recorded this execution. I should have. But if you want to see the labels, I guess I'll put the labels on for you. So, anyways, if you got any more questions, you can put them up in the chat. I don't want to take too much more time out of your Monday afternoon. Is journaling and studying the time frames, understanding why price did what it did, the key for mastering bias, or just watching more vids about the topic? That's a good question. I would say it's a combination of both. I really don't think, though, that videos is a hard topic, because I think there's a certain point where videos kind of lose their value. It's kind of like a logarithmic curve. It's literally like, if you had to draw it out, I think if videos were, you got videos watched and time spent, it's like kind of like this, where it plateaus the usefulness of it. So I really think that your own experience will teach you more about bias than any video will at a certain point. Obviously, you got to learn content. So it's really up to you. If you think, okay, the amount of concepts that I know, or not even know, but just understand, this is available. If you know, okay, I can be using these many tools, but I just start to need picking. If you're in the stage of picking which tool to use, or you're not really sure which one to use, that's when you should be removing videos altogether and just getting in price action, because that'll tell you all you need to know of what PDRs you'd like to see, what ones are easy to spot, which ones can you easily understand. I don't think adding in new data is going to do anything but make it difficult, because then maybe for a week you're constantly looking at, how does that data point fit into my bias, or how can I get a data point from there, rather than finding a very repeatable system where you can come in and be like, look at the hourly chart for about 15 seconds and get your bias. That's what I want to do. Not spend 30 minutes and look at it and use 14 different, approaches from 14 different videos and see how many of them line up. It's just not, to me, it's just not efficient with your time. So I think a lot of the mastering comes from just doing it and being very, very kind of just treating it like not a game, but you go in, you get your bias, you write it down. After the day is finished, you go back in, you delete everything off your chart, you re-annotate everything perfectly. Then you compare the perfect annotation to what your bias was going into the day, and then you analyze. How can I see from here, from the perfect hindsight, elements of, like, is there any way I can optimize me coming to this conclusion of why it's a bearish bias? Yes. Okay, I can remove this chart. Like for me, the 4-hour chart, it could be completely time frame analysis or PD arrays you just don't use. Like to me, the 4-hour chart, I'm very rarely referencing it to get like a very strong intraday bias. It plays in very much so in my weekly analysis, but in terms of a day-to-day price action, where am I targeting? It's the hourly chart for me just makes the most amount of sense, because that's what I studied. I would go in and like the hourly chart for me was like kind of the bread and butter. 15, same thing with the 15. I think for me, the 15-minute chart will always be kind of the perfect chart. It's the perfect mix of higher time frame and lower time frame. But in terms of like, if you want that one that one chart that you like to use, you got to just do it. So long-winded answer to just say it's really up to you to decide whether or not you should be continuing to absorb data or if you should kind of get in and do it yourself. Yeah, streams will just be probably based on the economic calendar, Maddie P. I'll probably still work in some of the when you have really good weeks, like probably when we get into April and May, I'll probably have like streams, 4 times a week, but it won't be super often because I think it actually just isn't as beneficial as it sounds. I think the less streams of high quality streams is the best way to go. But we'll just take it by day, to be honest. Yeah, too much data will also stall your development. I 100% agree. But yeah, anyways, as we one thing to mention, as price is dropping off like this, just because it's sold off X amount doesn't mean it can't keep going lower, right? So don't get caught in that retail mind thinking of, oh, it's gone up this far, it's gone down this far, or it just swept all-time highs, or it just swept the quarterly low. Just because it does one thing means absolutely nothing. Continue to go off of your analysis and the logic of the narrative rather than the feeling of, oh, it's gone too far or it's done this. That's never going to serve you well. So I just want to mention that because I know it's just been seems like every day for the past 3 weeks it's just been selling, and that's kind of what it is, to be honest. So get used to it. I mean, obviously we do have a contract switch next week, or in 2 weeks. What is that? Let me see. Then yeah, it's next week Friday. So next week, I would start monitoring it probably this Friday, but monitor the volume between this current contract and the next contract, and then switch over when the next contract becomes higher in volume. Okay. And then obviously if you're struggling with targeting in terms of this being kind of weird PA, just go to NQ. Oh, also, before I forget, it's daylight savings from Sunday, so make sure your time is set to the proper time zone. Make sure it's on New York. And also make sure that your indicators, if you use indicators, are also set to the UTC -4, the New York time. If you use the sessions by Nephew Sam, you have to auto set those. The ICT kills and some pivots, I believe, auto sets to, New York. So, but what I was talking about before is if you go to the NQ chart and then go to the B adjust on, you can actually be charting on here. And you can actually see the old data all the way over here in case it's kind of too messy for you. So if you want to be doing higher time frame analysis over here, it's probably not terrible. And then lower time frame analysis on the actual current contract, because sometimes there's discrepancies in minor things like a 1 minute VI or a 1 minute imbalance. Though, to me, that's important. So others it may not be, but the most precision will always be on the current contract. I'm not sure how this relates to the current contract, to be honest, but that's just what I was taught from ICT. So I'll always just use the current contract rather than the continuous. So yeah, tomorrow probably no stream for the private group. Yeah, most likely not. We'll just say no. Wednesday, Thursday, and Friday. Wednesday, Thursday, most likely Friday based on PA. This will be posted, on YouTube. It'll be unlisted, most likely. I'll put it into the YouTube vids section. So if you want to see it there, that'll be posted probably by the end of today. And yeah, I think that about wraps up what I wanted to cover. Obviously, if you have any questions, you can reach out to me in my DMs, or you can post questions in the general chat if I missed anything, and ping me there as well. So take care of the rest of the day. I hope you had a fantastic day so far and it continues to be going well for you. Journal, screenshot, address your psychology, review, do the things that are necessary to succeed. And I will catch you guys in the next one. Peace.